We also have a look at hog markets this week with University of Missouri Extension Ag economist Scott Brown. U.S. farmers have continued to churn out huge amounts of pork. USDA slaughter data shows November's pork output was record large for the month. That follows October's number, which wasn't just a record for the month, it was the highest total for any month ever with data back to the 1940s. The USDA's latest inventory report, released December 22nd, indicates supplies are still abundant. We talked with Scott Tuesday afternoon and began by asking for his thoughts on December's quarterly Hogs and Pigs report.
Well, Jeff, I think we continue to see an increase in all the numbers across that report, about 1% more sows on hand as we looked at the December 1 inventory. I guess for me, most important when you look at sows farrowed that's upcoming for the Dece through May period, up nearly 3%. That tells me we have a lot of pigs that are going to be coming to the marketplace in the latter part of 2018.
Do the larger numbers necessarily indicate producers have been making money?
Well, you know what, when I think you look back at 2017, number one, prices for hogs were certainly higher than many of us would have thought early in the year. If you look at the kinds of cost and returns data that we might get from Iowa State University, it would suggest on average producers did make money in 2017. I will say there were a few months in the latter part of the year where we probably saw a little bit of red ink, but frankly 2017 was much better than we thought, and I continue to remind us that $3 or in some cases sub $3 corn on the cost side has been really helpful to that profit equation.
At what point does expansion or the increase in herd growth start to threaten that profitability?
Well, I think the answer to that question lies a lot in terms of what happens on the demand side. If you look at 2018, given where we're headed, we're easily going to talk about another probably 1.3 billion pounds of pork that we're going to produce this year. We need strong demand to be able to handle that additional increase. When you look at it in per capita terms, it looks like we're going to be up about 2 pounds per person here in the United States this year in terms of pork consumption. And to me, that says we could see some weakness in prices. However, that's certainly not what we've experienced thus far, as demand has been more than capable of keeping up with the additional supplies that we saw come to the marketplace in 2017.
Is there a lot of pressure on foreign demand right now, that strong export market that we've seen? Is the industry kind of banking on that to continue?
Jeff, I think we have to keep exports going strong if we're going to handle, again, a lot more supplies coming. You look back at 2017, roughly 2/3 of the additional production that we saw happen in 2017 left the United States. Markets like Mexico, Japan, South Korea all get really important to this mix. You can throw China into that mix as well. For 2018, if we're going to move 2/3 of 1.3 billion pounds, we've got a lot of work left to do, and that brings into into the question a lot about what we do with trade agreements and so forth, with NAFTA renegotiation going on, potentially renegotiation with, you can talk about Japan and Korea as well. All of those things matter a lot, but we need growth in export markets given the kinds of supplies of pork we're going to bring to the market in 2018.
Is there significant concern about NAFTA now?
Well, I think we continue to wonder. I guess I look at it from a pork perspective, and it's hard to think that NAFTA makes us better off if we get a new NAFTA agreement, that is. So we certainly need to hold what we have. When you start to look at some of the cuts that we see occurring, ham prices showed some weakness as we entered the latter part of 2017, and I think part of that had to do with just what we've been shipping to Mexico and their interest in ham. So we can't not talk about NAFTA, and again, I hope we get a successful renegotiation. The last thing we need as we're growing pork supplies as hard as we are this year is a loss of a market for a period of time.
Let's talk about prices. First, SEW prices. Are they attractive right now? What do they indicate about the future?
Yeah, so SEW prices certainly are attractive. As we look here the last few weeks, we've gotten above $50. I will say that's seasonally where we've been. You'd have to go back, though, to 2014 to find a period of time where we've had really higher SEW prices for the industry. But I think, again, when you look at a lot of potentially open pig space, looking for pigs to put in there, as well as very cheap feed, it tells me we may keep SEW prices higher here for a period of time. But I expect some weakness as we get into the second quarter of 2018 as those seasonally start to move lower.
And your thoughts on where market prices go?
Well, it looks like right now we're set up for 2018 to, in many ways, be very close to where we ended up in 2017. I guess over the next month, we could see a little bit of strength. For me, it tends to be this fight between demand and supply that we have going on right now. Belly prices have been very important to where we've seen hog prices go, and we don't have belly prices abnormally too high right now. So if we get some strength in belly markets, I think that continues to give us some help and get us some strength in hog prices as we look over the next month. However, I wouldn't expect major run-ups from where we start the year here, just with those large supplies that are going to continue to be coming to the marketplace.